around 12 to 13. This is for was expected, and it's related to the diabetes site Q3CY25 in 2020. So Q3CY25 kept coding products in Sanofi site in Goa, waiting the authorization from the Indian authorities to manufacture this product, which was obtained. The authorization was obtained end of 2024, and this is what impacts mainly the export. A plan in place, so we were, as it was expected, so our colleagues from the manufacturing and industrial affairs already put in place a kind of plan to increase the volume at the Goa site and include other countries in the export. So we are exporting right now to Russia, it's a new market for us, South Africa, and certain products that were sold previously in CMO in India are moved to our site in Goa. Can we move to the next, please? Yeah, in terms of the OPEX, as you can see, the company continues to make significant progress on its strategy through targeted market initiatives and operational excellence. So we see significant optimization in the OPEX part related to the personnel cost and the other OPEX, minus 30% versus last quarter, and the ratio is improving, moving to 22%. So this is a significant contribution in the PBT, the profit before tax of the company. Next, please. So thank you. So if we take the export part, despite the fact significant decrease in the export revenues, but the impact in the profit is not so significant. All in all, it's around 8% of the total profit before tax and of export, and the major profit is coming from the domestic part with higher margin. So it's a good performance that we can see in quarter three, where it's double-digit growth versus Q3 2024, and we see the significant improvement in the ratio comparing the net sales, where we are moving to 29 from 23 to 29%. Same trend in YTD, where double-digit growth as well, and we see an improvement on the net sale, and this is what we are expecting in the next upcoming years if everything will go well. Next, please. So, can you come back to the previous one? I'm sorry for that. So the last point from my side is related to the interim dividend that was decided by the board today. So as disclosed today, for YTD, September, we will distribute an interim dividend of 75 rupees per share. Deepak, the floor.
Thank you so much. Can we move to the next slide? So thanks to Eric and Rashid. And what I'm going to do is to reinforce the points which have been already laid out. And this is to bring confidence to our dear investors that the transformation which has been done is to position ourselves for a sustainable and profitable growth. When we talk about the strategic transformation by being focused on diabetes and insulin portfolio, winning partnership model for our legacy brands, at the same time making sure we drive strong execution for bringing growth and significant margin expansion to our operational excellence. And last but not the least, we are positioning for tomorrow. So future-ready capabilities with AI, digital capabilities of our field force are towards making sure we capture India's high-growth diabetes opportunity. With this, I open up the session for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Take our first question from the line of Param Vora from Trinetra Asset Managers. Please go ahead.
Hello. Am I audible?
Yes, please go ahead.
Yeah, so what I wanted to ask was that despite exporting to 28 plus countries, the current, revenue contribution from India is 81% and Singapore is 18%, which comprises of almost whole revenue. So is there any part of geographic expansion?
Regarding the export part, right? Yeah. So as I mentioned in my in the slide, so we are trying to target new markets. So Russia is already there, so we succeed to release the budget, and we started exporting the first budget end of last year, and now it's becoming routine. South Africa is something coming as well. It's in the plan. And we are exploring other markets, so work in progress regarding this specific subject.
Okay, thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Rajakumar Vaidyanathan from RKL. Please go ahead.
Yeah. Can you hear me?
Yes.
Thanks for the opportunity. Sir, I could hear your comment on the exports. So I can see that the exports have substantially come down. So are you saying that we will kind of pick up this over a period of time, or this is going to be a new normal?
Yeah. So the export, it's was expected as he mentioned initially. So this is related to the site that we divested in 2020. I'll share our site to Zentiva. There are certain products, coding products, they need a kind of specific authorization from Indian authorities. And this took a bit long time, for almost 4 years for Zentiva to get it. So, and they get this authorization end in 2024. So this is what impacted significantly the export part. So as the subject was known, so our team were working on this project to offset the impact of the loss on the export. And as he mentioned, so there are new markets where we already add in the portfolio. So we are exporting already to Russia. So starting end of last year, so this year will be full year for the export for certain products. South Africa as well in our projection, and the site is becoming as well a kind of unique site for certain products worldwide. So based on the evaluation that we have done, I think we will not cover 100% of what was lost in terms of export, but with this initiative, I think we will offset part of it. Another part will be offset by certain products that were manufactured previously in CMO, told in CMOs in India, that we are moving them to Goa site. But despite the fact, what I can assure you that despite the fact that this impact is significant in the top line, but in the bottom line it's not, because the export in terms of profitability versus the domestic sales, it's a kind of 8%. And the profitability of the export is not so high as what we have in the domestic segment. So that's why, despite the fact that we are losing significantly, say, in the export versus last year, it's not impacting our profit before tax.
Okay, got it, sir. Thank you for this explanation. So the second question is this partnership, the top line comparison, you're saying you've grown by 5% for this quarter. But my comment here is the previous year number, your sales would have been very high because you would have had your own marketing and sales team, and your pricing of the product would have been on the higher side, because now you have a partnership, you have priced it lower. So does it mean, I mean, understanding correct? So if that is correct, means then we are not comparing apple to apple, right? Because this +5 is only the value difference.
No, we are comparing, let's say it's not apple to apple exactly, but I think it's comparable. Let me explain a bit, the model that we have. It's distribution and marketing agreement. So it's not a divestment. So it's part of our portfolio where we capitalize and we expecting growth from this portfolio. And so it's not divestment. So the partner is, distributing and promoting the product. So the promotion is at his level, so we are not promoting anymore at our level. So this is how the partnership is done. So at the end of the day, it's comparable. It's a very competitive market. So if we say, even the growth to 5%, let's say, it's a good, I would say, it's adequate growth, knowing the competition in such segment. So and if you want to continue about that,
no, maybe just to add that the ambition is really, and the whole idea is to capitalize on the capabilities and the reach of these partners. We're able really to reach not only tier 1, but also tier 2 and tier 3 cities where there is a huge potential that we could not focus on because, we wanted to be focused on developing the insulin. So by doing this kind of partnership, we're able to be laser focused on our insulin development while growing the market with the support of our partner on the rest of the portfolio.
Okay, got it, sir. And sir, the last question is, any new launches you're planning, in the upcoming quarter?
Yeah. You want me to take it or you want?
Yep, please go ahead.
Yeah. So we are exploring with the group, any opportunity that we can launch in Sanofi India Limited. For now, there are business cases under validation. Nothing for let's say, for next year. But the organic growth that we are expecting from current portfolio and is a respectable growth versus the market. So in terms of for the insulin portfolio and for the partnership. So the answer for 2026, we are not expecting launching new products, but there are still certain work in progress regarding certain products.
And we are very much in the launch phase of Soliqua until now. We just launched less than, let's say, a year and a half ago, with an uptake that we know will continue to be sharp in terms of increase. So I don't know, Suresh, if you want to jump in on this one, but the focus really right now is to make sure that we accelerate the uptake of Soliqua. And so far, we've been delivering a very successful launch.
Okay. And so lastly, just one comment, sir, no question. So, sir, the comment is, I see that your top line is kind of very volatile. It kind of the investor is a bit nervous. So I hope your numbers will be, more straightforward, go forward. Because, I know that you had a consumer business earlier, but even after that, in a couple of quarters back, then the number was stable. But now again, last quarter, you reported very drastic drop in sales. So I hope the numbers will not yo-yo, go forward. That's one comment from my side.
Thank you for that. Quarter 2, same. The major impact for us in 2025 is coming from the export part. So it's the same explanation as what we have done right now, and agree that there are certain fluctuations, but it was expected. Yeah, thank you for your comments.
Yeah, thank you so much, sir. All the best.
Thank you. We'll take the next question from the line of Rajesh Nirala from 3P Investment Managers. Please go ahead.
Yeah, thanks for taking my question. So what impact do you expect on your insulin and diabetes portfolio once a generic semaglutide gets launched in India in March 2026?
I will let the expert answer, Suresh.
So the GLP market when it comes to the orals. So from what we understand from various FGDs with the HCPs are that they are not to replace the insulin initiation. The segment is very different. One we're talking about weight loss, and the here talking about the insulinization. So we have seen a similar kind of a thing whenever any new drug came in place, be it a SGLT2 or a DPP4, it may delay insulinization a bit. Finally, HCPs come back to insulin. In very many conversations we have, HCPs have reinforced their confidence on insulins. And they are so glad that Sanofi wants to pursue in the space of insulin without moving away from the portfolio management. So to give confidence back, but for initial conversations with some of the patients for weight management, HCPs want to initiate insulin. And recently, with Saliqua coming in the space of a mix of a GLP plus insulin glargine U100, which they have a huge confidence on, their focus is more on initiating patients on Saliqua as well.
Okay. And the second question is, I see most of these products are old gen products like Lantus, again this Soliqua, which were launched way back in the international market. So what is the launch status for Dupixent, Beyfortus, Altuvio in the Indian market? Are you planning to launch these products at all?
You want me to take it or? Yeah. So, to answer to your question, so as you know, we have two legal entities in India, one the listed company and the second one, the private one. So regarding Beyfortus was launched this year in the private co, as the vaccine part since the beginning was there. So and we didn't see any added value that we launched, Beyfortus, for example, in Sanofi India Limited, as there is no synergy at all between the two portfolio that we are managing. Dupixent, for now, there was a lot of discussion about it, but still not finalized yet.
Yeah, it's very much on the case-by-case basis. And as we said earlier, the focus right now is really to position Sanofi India Limited as the champion for diabetes. So with a very strong focus in the short term on insulin. If we have in the portfolio, and there might be some relevant products that are good complements for our diabetes portfolio approach, definitely we'll consider it. But in the short term, as I said earlier, the focus is really to accelerate the uptake and deliver a successful launch for Soliqua and to continue the growth on both Toujeo and Lantus.
Okay. All right. Thank you.
Thank you. Next question is from the line of Sandeep, an individual investor. Please go ahead.
Good evening. So I have three questions. One is, what is the Sanofi India plan towards entering into biosimilars? And can you give some guidance on how much revenue contribution is expected from biosimilar segment in next 2 to 3 years? That is question number one. Question number two is, what are the new segments where company is planning to enter? And my third question is, what is the revenue and profitability guidance for next 1 to 2 years?
Okay. So, contribution of biosimilar, new segments, and evolution of the profit.
Mm-hmm.
Maybe Suresh, maybe you can answer on the first point on the biosimilar.
Thanks, Eric. It's a very good question, considering the fact that the more biosimilars are, we are going to improve the share of voice on using, glargine in the marketplace. So, and we have seen that also. Despite more biosimilars coming, we have not lost our value market share in the overall glargine segment and the basal insulin segment. We are still market leaders with approximately 50% market share for Lantus and the 12% market share for Toujeo, taking it to overall 60-63%. So our market share continues to keep moving up with the biosimilars coming in space. And considering the fact that biosimilar prices are equivalent to Lantus now after the NLEM of Lantus, the need for using biosimilars for the doctors is slowly, I would say, losing interest with Lantus available at the same price being an innovator. So we can be rest assured that the impact would be much in favor of the innovator Lantus in that space. The second point, considering this, we are expanding largely with the reach on U300, which is our Toujeo, where there is no competition and there are a lot of scientific evidences is there to back it up. So overall, as a glargine family, we are winning.
Okay. And to complement on the segment, yes, on your question on the segment and the new segments we are going to tap, as mentioned, the second generation basal insulin, U300, we believe that there is a potential in the public sector in addition to our current focus in the private sector. So we are deploying a new go-to-market model in order to allow us to tap both the public opportunities and the private opportunities.
And which are the new segments where company is planning to enter? Okay. Am I audible?
Not sure on the question.
Yeah. Yeah. Is the company planning to enter into new segments, and which are those segments? If you can throw some guidance on that.
I think Rachit already mentioned it that for at least for 1.5 years, our focus will be again to accelerate the diabetes performance with the acceleration of Toujeo and Soliqua, while we keep on looking at the business cases to see what we can bring into the country.
Yes, and I think we have the conviction there is a huge opportunity in India for the diabetes segment. So we don't want to dilute our efforts. I think what matters right now is to make sure that we fully leverage on this potential and we strengthen our leadership in this field.
Got it. Thank you, sir.
Thank you. Next question is from the line of Sameer Deshpande from Fairdeal Investment. Please go ahead.
Hello.
Sameer
Hello.
Deshpande?
Yes.
Go ahead with your question. Yes, we can hear you.
Yes. Sir, after the demerger, the product portfolio naturally has got divided into two companies. And we continue to focus on our diabetes and the central nervous system and cardiovascular portfolios. So you mentioned that you will be concentrating mainly on diabetes portfolio only. But why there are no launches likely in the other two areas, that is cardiovascular, which continues to be a very big area in India. And another is central nervous system also, which also is a big area. We already have some products in both these, and they are good brands. So any brand extensions, etc., in those are not planned?
Yeah, it's a very good question that you are asking. Look, I think benefiting from the Sanofi portfolio is giving us more chance to succeed in India market. So
yes.
we cannot compete in the generic market. This is for sure. So we tried in the past, and we found that it's not really successful comparing when you launch the product where you have the support from the group and you have all the studies and all this stuff. So for now, we are always evaluating options, when we see the opportunity, we do it. But for now, we see that what is coming from the group portfolio is more successful than other things in India. But we're still evaluating.
So now with the current bottom line of around 470 odd crores in this quarter, do we hope to have an annual turnover of around 2,000 odd crores for the year?
Yeah, thank you for the question. We are sorry that we don't give any forward statement. So let's say the trend is positive. We can see it in YTD for the quarter. Then I think it's sufficient to evaluate, to make forecast for us. You will do it better.
And lastly, regarding this exceptional item from 27 crores is the VRS. Now, already in this quarter, our employee costs have come down from 56 crores to around 42 crores in this quarter. Now, so what will be the run rate for the employee costs going forward from the next quarter?
Yeah, so I think it's so we for this quarter we should not link the decrease on the OPEX for the personnel costs with the restructuring. So it's one exceptional event is related to the transformation that we have done and the partnership that we signed with NQ for oral anti-diabetes. So this was announced in July. So after the closing of the previous quarter, so that's why we are booking this restructuring in Q3. Now it's let's say 1 month saving for the quarter. Whereas for next year, I think from one quarter to another, the saving will be more and more in the personnel cost.
No, I did not actually understand. And
I cannot exactly the impact.
No,
so
actually my question.
We are expecting the personnel cost. Okay, go ahead, please.
And operating margins in this quarter are around 28%. And so what I wanted to ask is that whether this 27 crores is a one-off, I know. But will this be in a position to reduce our operating costs further and enhance our operating margins from 28%?
I think the trend of the OPEX will not increase for sure, but where we have opportunity to optimize. So this is what we can see from 1 year to another. So if you look to our financial statement from one quarter to another, for 1 year to another, there are significant optimization and efficiency that we are looking for. This is one of the priorities that we have without impacting the business, of course. So without impacting the top line. When we have opportunity to do it, we do. So we are not expecting an increase in the OPEX, in the operating expenses. So that's what I can say right now.
So the margins are expected to be better or continue at these levels at least going forward. Okay. Thank you very much and all the best.
Thank you for your patience with me.
Thank you. Before we take the question, we'd like to remind participants to press star and 1 to ask a question. Next question is from the line of Lakshmi Narayan, an individual investor. Please go ahead.
Hello, am I audible?
Yes.
Okay. So firstly, let me congratulate the management on a successful spin-off and also for all the margin improvements that we are witnessing. I have two important questions, and then the third one is a sub-question. The first question I would like to know is, given that Novo Nordisk had vacated the human insulin cartridges and the dispo pen market, which is supposedly a 450 to 500 crore size, and also the fact that they are going to exit similar market in emerging markets also, has our company seen any benefit of this? especially given that we have insulin and other human insulin product available. So that's the first question. So are we gaining market in the domestic area, and also are there plans to cater to the emerging markets where Novo is currently exiting? That is the first question. And secondly, over the last 2 years, in one of the conference calls, management had actually mentioned that they had that the parent had taken over a company in type 1 diabetes area. So today I was a bit surprised not to hear any talk about launching new product in the type 1 space. So I am actually not able to recollect the acquisition, the company's name, but it was in the T1D space. So I was hoping there would be some talk about launching the new product, especially it is in the same diabetes area. If you could take these two questions, then I could maybe come back for the later in the. I'll join the queue. Thank you.
So yeah, you're right that Novo has expressed its disinterest with the human premix insulins. But we should also be aware that human premix is a highly commoditized space with a lot of other generic players as well. So it's not an easy game to win. But having said that, it's not that we do not have a strategy around ensuring that the last excuse for an HCP to use a premix insulin is now not there. So still the price difference between human premix insulin cartridges and Lantus is significant. But the effort is on in terms of ensuring that a HCP looks at Lantus as a first-line choice in an already uncontrolled patient and looking into human premix insulins as well. So I could state to that extent that we could see initial signs of HCP's behavioral shift in terms of advocating Lantus ahead of human premix insulins.
I will take the second question. You are right. I think in one of the previous calls we are talking to launch one product in type 1 diabetes. Still evaluating the opportunity. When we launch, we want to be successful in the market. Otherwise, we don't want to launch a product just to launch a product. So we see our focus on Toujeo, on Soliqua. There is a real growth. So there is strong support behind that. Now we still evaluating that. That's what I said at the beginning, and I hope that we will have the approval for such cases.
Maybe just to complement T1D, and it was mentioned, is a very, very important segment where globally Sanofi is innovating and wants to take the lead. At this stage, as you mentioned, we are assessing the access condition that has to be shaped in order to successfully launch this product in the future in different markets. We are still making.
Mr. Narayan?
Yes.
Does that answer your question?
Yeah, I'm fine. Thank you.
Thank you.
We'll take our next question from the line of Palak Shah from Interest Family Office. Please go ahead.
Hi. Thank you for taking my question. Just want to know what is the net impact on the financials because of this JVs and partnership? Assumption would be there will be some sharing of margins with the partner or the JV partner. In that model, we'll have some net impact coming off on the revenue, reported revenue. Could you just help me with that?
Yes. So there is an impact, on the top line. It's a gross to net model. And the partner will distribute and promote the product. So both impact on the top line and impact in the OPEX part as well.
Got it. So net impact, any number that you can subscribe, because the 2% growth in domestic market, when you look at it, that will have some material impact because the last year base would not have the couple of hires that we did in the last 12 months. So this reported number seems to be subdued because of that, if my understanding is right.
Yeah, but look, the partnership, how we built it, that, the growth will come from one year to another. It's not immediate. So what we are saying, as how we evaluated initially, we discounted cash flow versus a scenario. So if we are keeping the portfolio at our level versus a partnership. And this is going to take a big time, so it's not immediate. So I think starting the year 3, we can see it's already, we see improvement from one period to another, and starting from next year, I think, and the year after, it will be showing a better trend versus what we were doing in the past. Because as mentioned by Eric and Deepak, with this partnership, we can reach, certain tier 2, tier 3, where we are not able to do it by ourselves. And the share of voice that they have is significant versus what we can afford in-house.
But then this reported numbers do not actually see the benefit of this partnership. When it's after partnership, we are going at single digit, and to that a low single digit, and the net effect of the voice of share and voice of mind the partners have does not seem to be reflecting in the numbers. So what are we missing here?
Look, double-digit growth, we're not expecting to be honest with you, I'm not expecting growth from the partnership. So it's a very, very competitive market, and we see improvement. We see market share gaining from our partners, but it will not be a kind of double-digit growth coming from this portfolio.
What we see that these partnerships have accelerated the growth. I mean, as compared to when we were promoting and distributing this product in-house. And you can see already that we've compensated the downside of gross to net by a volume growth, and net to net we are growing by 2% in this segment.
Yeah.
And we are aiming to continue to grow. That we have already compensated this loss of gross to net, and you can see as well that the impact on the bottom line is positive, meaning that we are generating DOI, we are growing the DOI faster than the top line.
It's a good question as well. There is, thank you, Eric. In addition to that, there are certain movement of stock. So the 2% is not really reflecting, exactly the sales, the secondary sales. Whereas we see, all in all, it's a bit more than that. Yes. That we cannot disclose more information than that. I think in 2026 it will be comparable, apple to apple. Till 26, 27, it will clean up everything, the transformation and the movement of the product.
Just lastly on the new product launches, given our size and the parentage that we have, why is the launches specified to just couple of products? And given the basket that is not launched, so the brands on global stage which have not launched in India, why can't there be a higher number of launches? Especially given our size and our strength from the parentage, both on the product side as well as the marketing that you can do, the learnings you can take from them.
You want me to take it? Or you want to take it? Yeah. Look, honestly, when we look to the launches of new products from Indian companies, okay, the failure rate is quite high. So they launch the product. I don't have the rate exactly in mind, but for sure it's more than 50%. It's quick if they launch, and then they fail. Whereas we want, when we launch a product in the market, we want that it will be the right product for the patients in India, and we succeed, and it will bring additive value and added value for our shareholders. Now, regarding certain products that we have in the portfolio at the global level, in terms of price, I'm not sure that the Indian patient can afford such product. So we are looking for certain access for this product, but it's not so simple. The new product, for multinational in general, launched in certain markets, even they are selecting certain markets where the reimbursement will be there, and we will not fail when we launch the product. So this is what we don't want to have as experience.
Correct. Great. Thank you so much. Yes. Thank you so much for giving me a detailed answer. I wish you all the best.
Thank you.
Thank you.
Next question is from the line of Paresh Jain from Bajaj Life Insurance. Please go ahead.
Yeah, good evening, gentlemen. Thank you. In the presentation, you make a very interesting observation of a remark about using AI. Can you just elaborate a little bit on that? How are we using it, and how big is your tech team today?
Sure. So we are using AI at all levels of the organization. Just to be clear, it's not only the commercial team.
Your voice
focus on what we are doing.
Your voice is not very
clear. Focus on what we are doing. Can you hear me?
Yeah.
Can you hear me now?
The voice was not very. No, I can hear you, but it's not very clear.
Yeah. Yeah, it should be better now.
Yeah, now it's better.
It's okay?
Yeah.
Okay. No, I was saying, let's focus on India, and I'll give you a few examples. We are implementing AI everywhere where we can create value, from R&D to commercialization and to post-marketing studies, etc., etc. In our operation in India, we have really transformed the ways of working with AI. On the way, for example, we develop our marketing tools with generative AI. On the way, we support and we help our sales forces in order to define the next best action. So they are equipped currently with tools, AI tools that are giving them the right direction for a given healthcare professional with the right messaging and so on and so forth. And these are only just examples. We are really leveraging on AI wherever we can. In finance, for example, we are all equipped now with regular reports and agents that are giving us some recommendations on the way to optimize our ways of working, our OPEX, and so on and so forth. So these are just examples, but be it what we call expert AI, which is more upstream, let's say, to what we call snackable AI, which is more downstream and day-to-day, we are really all in on AI, and we are trying to empower all Sanofian with the right tools in order to amplify the capabilities and make sure that we create value.
Yeah, I will add one point, as you mentioned. Just 1 second, I will share my experience in finance. So, in terms of forecast in supply chain or, the forecast that we are doing for budgeting or whatever, we reach a certain level that AI, in terms of forecast, is ±1 versus the reality, whereas, our forecast was not better than that. So we see significant improvement in the AI in terms of forecast, avoiding, obsolescence for our stock, for example, new launches as well. So we have certain recommendations from AI, top line, OPEX part. So we have a good trend coming from AI. This is related to the financial part.
And in the day-to-day operation, if I take the example of regulatory affairs, where we have to submit some variations, etc., etc. We've been streamlining considerably the timing for submissions using AI in the preparation of our file and in the elaboration of the dossier in general. So again, these are just examples because we could talk about AI for hours. There are numerous examples at all levels of the organization.
Yeah. So thanks for the examples. But to summarize, if I were to just ask you that what has been the financial impact of it, either on your top line or on your bottom line, if you would just quantify that just for our understanding, that would be great.
Honestly, quantifying, I don't have a number on mind, but if you take the obsolescence, in the past, in general, so we see forecasts coming from the teams with sometimes optimist, sometimes not optimist. So for the first one, we are avoiding significant obsolescence for the stock because we are manufacturing based on the forecast coming from the commercial team, and in the second point is when we are forecasting less, sometimes we have lack of opportunity for the business on the top line. So sorry that I cannot quantify, but we see significant improvement in the obsolescence part, where we are less around 1%. In the past, it was much higher, and this is the trend for the majority of the market operating with AI right now.
Okay. And one last question: how big is your tech team, and what is the technology cost that we incur?
I'm not sure to get the question. Can you repeat? So the IT team.
I'm saying,
how big is your IT team?
And what is the technology cost that we incur every year?
So now it's difficult to isolate because we are operating with a very big group, the Sanofi group. The IT team is scattered all across the world with a big presence in India. So it will be difficult to give you an exact number, but I can tell you that we are fully supported by the group, and that we have access to in-house solutions. I mean, we have our in-house AI companion. We have several in-house developed solutions like Expert AI, as well as existing solutions that are in the market with whom we are partnering.
No, but Sanofi India would have a technology team of their own, right?
We have a local team, obviously, but again, when it comes to AI, it's not an isolated game. I mean, we are leveraging on the group, and we have a group strategy.
Yes, we have a local team supporting India team here, and as mentioned by Eric, the standard solution and the standard system we are implementing to modernize India is coming from the group. So we can say today, by the end of this year, because we were behind, right? End of this year, we will be aligned to the more modern system that we have within the group in India. So this is the plan. So it's a very ambitious one, and I think the team is on track on this.
Thank you. That was it from my side.
Thank you. Ladies and gentlemen, to ask a question, please press star and one on your phone. As there are no further questions from the participants, I now hand the conference over to Mr. Rashid Ayari for closing comments. Over to you, sir.
Yeah. So on behalf of Sanofi India Limited, that concludes this conference. Thank you very much for the quality of the question. Thank you for joining us, and you may now disconnect.
Thank you, sir.
Thank you, everyone.
On behalf of Sanofi India Limited, that concludes this conference. Thank you very much for the quality of the questions. Thank you for joining us, and you may now disconnect your lines.